Good morning and welcome to this live Prescient Credit webinar, which will outline renewable energy and where we have seen momentum. My name is Angelin Daveni from Prescient Institutional Business Team, and I am your host for this morning. This morning, Prescient Investment Management presents to you Mr. Conway Williams, Head of Credit and Portfolio Manager, as well as Mr. Luzuko Nomjana, Portfolio Manager and Credit Structuring Analyst at Prescient Investment Management, who manage the Prescient Clean Energy and Infrastructure Debt Fund. Our webinar content for this morning will focus on Renewable Energy Independent Power Producer Program and where we're headed, Risk Mitigation Independent Power Producer Program and the emergency round, our thoughts and viewpoints, the rollout of the Integrated Resource Plan for 2019, including round 5 and future bid windows, embedded generation and refinancing of existing projects. From a housekeeping perspective, we will be applying for CPD points for this event in order for it to be a CPD qualifying event. On approval of the Financial Planning Institute of Southern Africa, a CPD certificate will be sent to all qualifying participants. In order to qualify for the CPD points, please be logged in for the duration of this webinar. We will have a question and answer session at the end of the webinar, so please post your questions in the Q&A box and we will engage in the Q&A session at the end. We'll also be running a poll during this webinar, so please be so kind as to participate in the polls that will be displayed on your screen in the middle of the screen by clicking on the appropriate answer. I'd like to hand over to Conway Williams and Luzuko Nomjana to take you through the Clean Energy and Infrastructure Debt Fund. Please enjoy the webinar.
All right, thank you. Thank you so much, Angela. I hope you can you see our screen, Angela, on your side?
I think it's still loading. I can't see anything on my side as yet. Luzuko,
I'll give it,
try again.
I'll give it a minute just so we can it loads up. Please let us know when it actually pops up on your side.
Okay, go ahead.
Sure.
There is something on the screen, Luzuko, maybe go into presentation mode. That's it. Perfect. Thank you very much.
Perfect. Thank you so much. And yeah, welcome to everyone. These are brief bios, which I won't spend too much time on. And we have done what our industry experience has, or what we've done, what it looks like, what our scars look like, I guess. So without further ado, I thought it's probably best idea to actually maybe talk briefly in terms of our Clean Energy Debt Fund, which is obviously our clean energy offering. The fund is currently 1.5 billion, house exposure 1.9 billion. And as you can see, we invested fully in projects that are operational across various bid windows and obviously across various technologies. The fund was launched in September 2015. Very strong yield of 9.6%, and of course we're offering a 4.5% real return above CPI, weighted average of 10 years, which are obviously driven by the underlying projects which are fully invested under RIP. In terms of performance, very strong performance, especially over the long tenor. A lot of people obviously ask what has happened in the past year, and I'll talk briefly about this. But the key reason really is that we had a bit of a cash drag, and that has been driven really by the hiatus in the South African renewable energy market, and I'll talk briefly about that in one of the slides. But very strong, very consistent performance, especially over the long tenor, and we have no reason to believe that this is not going to continue. Very important to be a responsible corporate citizen. This slide actually talks to the core of why we do what we do, obviously outside of the returns. A lot of people ask, 339 jobs seems rather low, if you spread that across 16 projects, and that is correct. But the context there is that is 339 jobs today. So if you were to go to each and every one of these plants and count the number of jobs, that is the number you'd get to. However, it's very important to understand that during construction, that number was actually 3,220. And that is when the real jobs are actually created. And that was very important to actually highlight that.
So Luzuko, if I were to ask you a question on this one, right?
Mm.
1.5 gigawatts.
Yeah.
What does that mean to the man in the street?
1.5 gigawatts basically means that you're actually providing clean energy to about 300 South African households, 300 average South African households, which is a big number. And if you're actually able to do this and you're providing clean energy that is reliable, this is a solid story to tell. A lot of people ask, well, okay, we've got these jobs, what is their detail? And that is exactly what we try to show there in terms of the youth, in terms of how many women, in terms of RSA Black citizens. And I think very encouragingly, you'll realize that the lion's share of these jobs are actually in the Northern Cape. And that is very important because the Northern Cape is one of the most economically impoverished provinces in South Africa. So it's very, very encouraging that most of these jobs are actually created in their province. And Bid Window 5 is actually going to be very located in the Northern Cape as well. So that continues actually on that trajectory. Right, to get to the crux of it now, just close this pop-up. To get to the crux of it, I think the first thing to talk about is that the renewable energy, South African renewable energy program has actually been enjoying very strong momentum over the past year or so. And the background to this really is that if you go back to Bid Window 4, for example, Bid Window 4 was awarded in 2015. And up until late last year, when Bid Window 5 was actually announced, there was a bit of a hiatus in terms of the renewable industry. And this was seen, I think, or felt really painfully, especially in areas where, you know, the large OEs, original equipment manufacturers, actually established plants in South Africa to either manufacture these panels or to actually do components. And those plants actually, you know, employed people. Now, to the extent that there was a hiatus of about 4, 5, 6 years, that means that those plants actually had to close down and obviously result in job losses, which is obviously the negative really of what we're trying to achieve as a country. So this is very encouraging. Bid Window 5 was announced late last year, and Bid Window 6, as per the minister's announcement, we're expecting that to come through sometime in March, so over in the next week or so. And after that, we're expecting a new bid window after each and every 6 months. And this is the momentum that as an original equipment manufacturer, you actually want, because it basically says that you then have very good reason to actually establish a plant in South Africa, because you now have a scalable renewable energy program that is supported internationally. There's a battery storage RFP that we're expecting to come out in April 2022. And that will be very interesting because that will be the first of its kind in South Africa. And I think that is reflected in the size, that the size is actually 513 megawatts. So we're obviously looking forward to that. And really the crux of that, or the context of that, is solar, wind, obviously inclement in nature. You do need some base load provision there, and that's what the battery storage is actually trying to achieve. So really positive and encouraging momentum, and it's really actually you know, supportive of the investment by the industry into this asset class. Okay, there is I think around about early last year, a minister came out, and this was obviously in direct response to, we had rolling blackouts, rolling load shedding then at that point. And the IPP, together with the Department of Energy, basically then introduced this emergency bid window. And as the name suggests, it was meant to be emergency, right? And actually, those projects were actually expected to start connecting to the grid from July. So we'll be expecting the first one of them now to actually be connecting to the grid and providing power in the next 3 months. Now, and the idea there was reasonably clear, right? For example, when there's load shedding in Eskom's plants, especially the coal-fired plants, ESCOM typically then goes back to rely onto the OCGTs, open diesel fired open cycle gas turbines, and these are diesel fired. And obviously diesel is very expensive firstly, but also it's also highly pollutive. And the response there was that try procure shovel-ready projects, right? Because they obviously were only going to have a year to actually go into construction. Procure it in a cheaper manner, right? And that was reflected in the bid window, right? Because the weighted average of the bids that were actually awarded were $1.60 per kilowatt hour compared to north of $2.50, I think, north of $2.60 per hour in terms of the OCGTs. Now you can see immediately that this the emergency bid window was actually going to come out cheaper, was actually going to come out much cleaner, right? You're looking at a combination of solar and wind, and obviously some gas or some diesel, because obviously there was a need to provide some base load. But to the extent that the majority of that power is actually going to be generated from solar and from wind and from clean gas. Now that was very clear, and you could see what exactly was the idea behind it. Now, unfortunately, a lion's share of this bid window is actually allocated to car power ships. And these are the power ships that would come and basically be at some of these ports in South Africa and basically dock there for 20 years, and they're banning this gas. And DNG, who, by the way, were actually a bidder of a power ship as well, right? So it's very important to actually highlight that they were actually not trying to provide a different thing. They're also trying to actually supply a car power ship. It basically took the award of car power ships, particularly the Turkish guys, and basically said, they had reasons to believe that the award was unfair, was unprocedural, and that obviously went all the way to court. And that obviously meant that the whole bid window had to be halted. You obviously have to allow the court to take precedence and go through that process. And that, when the court came back recently and basically dismissed DNG's challenge, I think for me that meant two things. That meant, one, that the process run by the IPP office is actually very strong and is actually very transparent. And it has been taken through the court, through the court for the very first time. And I don't think the market generally had any issues or had any suspicions, but the fact that it was taken through a court and actually came out strong, I think comes out very strongly, right? And regardless, in any instance, the DNG challenge is now out of the table. We don't know if DNG is actually gonna come and appeal, but we don't know that. But in any instance, the power ships are still outstanding in terms of environmental approvals, and this is obviously one of the most necessary regulatory approvals that has to be issued by the Department of Energy, the Department of Environmental Affairs. And that is very important because it's that department that has to say, we actually believe that on a balance of scales, the benefit that is going to come out of that far outweighs the cost that these power ships are actually going to do on the environment. And it's very important that that process runs independently. And I'm very encouraged by the fact that the Minister of Environmental Affairs has actually appointed an independent consultant to express an opinion on whether the refusal by the department to grant these guys these approvals is actually fair or not. So I think particularly this emergency bid window, the idea was clear, knew exactly what we wanted to do, but it had to be taken to court, and obviously the court had to take precedence. Now, this means that obviously the financial close for this bid window had to be moved out. The current financial close is 31 March, which is obviously 8 days away. It's very unlikely that is going to happen, and my view is that it's actually going to be moved out by a couple of months again. But unfortunately, I think what was a good idea turned out to be not so good in terms of providing emergency energy onto the grid.
So I think, Luzuko, the question that we've been struggling with internally is whether the minister can actually cancel the risk mitigation round. Thoughts on whether he will not, and also if he doesn't, why doesn't he?
Yeah, and that's a very good question, because I suppose a lot of people have suggested why do we not cancel? Why does the minister not just cancel the whole bid window? And I think that would set a very bad precedent on an otherwise world-class renewable energy program in South Africa. And the fact that this program has now gone to court and come out strongly actually basically reassures this. So I think canceling this project actually set a very bad precedent, and you really do not want to do that. It was very clear, in fact, the response by the IPP to the courts when they actually submitted their documents, their bid award documents, that showed very strong transparency. And I think continue on that trajectory. If it means relook at the terms that you agreed on in terms of the car powerships, but then do that. But do not let that affect the rest of the emergency bid window, because I think there was good stuff that actually came out of this.
And to be honest with you, the thesis is still very clear, right? Procure shovel ready, cheaper. Again, give us the emergency power because we clearly need it.
100%.
So I don't think our thesis there has changed internally or externally on why it should go ahead.
Yeah.
But the precedent part is definitely taken.
Totally, 100%. Okay, moving right along. Moving on to embedded generation, and this has been one of the key catalysts to renewable energy in South Africa over the past couple of months, when the presidency, right during the peak of COVID, basically came out to announce that they're upping the cap from 1 megawatt to 100 megawatts. And this was very clearly driven by the mining sector, because they basically, while the president was contemplating on this request to actually revise these caps, the mining industry came forward to the president and said, these are projects. I think they presented about 1.5 gigawatts of projects that are actually ready, that they keen on. And it is very clear why they needed to do that, because when you're a miner, for example, you need reliable energy, much more than cheap energy. I think at the top of the priorities is actually reliable energy. We unfortunately haven't had that in South Africa for the past 12, 15 years as a result of load shedding. So this has been affecting the productivity of the mining sector quite directly. The mining sector is obviously very important in South Africa. They provide, I think they're one of the biggest contributors to our GDP as a country. So you really need to be able to protect that sector to the extent that you can. And it's very refreshing. It's very welcome to actually see that, the president was able to be agile and say, well, why don't we actually allow this 100 megawatt cap and allow these guys to generate their own electricity to the extent that they actually can within the frame of the South African context. So this has been very encouraging. And once again, the mining sector has obviously been at the forefront of that. We saw Sasol has about 600 megawatts of plans to go into renewable energy. Anglo has announced recently that by 2030, they actually intend that all of their operations will be totally off-grid. And that is very strong, because it basically means that we're able to actually generate our own power. Of course, it may not necessarily come out cheap right now, but in the next few years, it will actually be. And I think the other very strong thing is the ability to predict your price increments, right? Typically, when you go into these PPAs, you actually have very clear, very strong cash flows. You know that in a year's time, your price is actually going to increase by CPI, whatever CPI is, 4.5%, 5.7%, whatever that number is. You actually, as a business, you know exactly what you're actually in for the next 20 years. And that is very, very important for any business that seeks to actually expand their opportunities. So this is very strong and very encouraging. And a lot of people, I suppose, say, well, this is actually taking, revenue away from Eskom. But in any instance, when Eskom runs load shedding and we lose 25 days in a year, that is actually revenue lost to Eskom in any instance. So this is actually supplementary to Eskom while actually being defensive from an economy's point of view. Our economy needs all the help that it can get at the moment. So go ahead. I really encourage embedded generation.
So I think the one thing that we also need to highlight is the examples you provided. Sasol, we provided Anglo-American, and then obviously the recent announcement by Ivanhoe. These are significant polluters as well, right? 100%. So if you're thinking of what going off-grid would mean for South Africa in terms of meeting our requirements under or commitments under COP26, and just getting us to that 1.5 degree level, this is exactly what we need.
100%.
Again, so think of it: economic stability, reliability for the mining sector, SDG improvement. So this is the entire just transition thing that we are talking about.
Absolutely.
So we're very excited about this. It could mean that we could put different types of assets into our fund we haven't in the past. So a retailer or a REIT that's now putting it on top of their malls. Again, we can support them, I suppose, very in a sustainable manner.
Yeah, you see this. You see all these solar panels coming up on rooftops of all these malls, and that is exactly what you need to do. But what I think is also very important now, coming out of the embedded generation market, is that it's driving price discovery of a long PPA, 20 years roughly, where there isn't a government underpin. Now, previously or currently in any instance, where you've got a long-term PPA, it's underpinned by the government, right? There's a government guarantee through the National Treasury. Now, what you're actually saying is many instances where there is price, there are tariffs being discovered, there is debt pricing that is being discovered, and there's no government underpin. And that pricing is actually coming out very competitively. Now, take a few years ahead, and you're sitting at the IPP office, the Department of Energy, and you're looking at this big contingent liability, and you're thinking, what is the best way to actually deal with this and get this off our balance sheet? This is what the embedded generation is actually doing, and it's actually showing that there is ability, there is appetite in the South African market to actually do and bank these long-term PPAs without a government underpin, to the extent that your risk is obviously obviously protected, and you've got all the right protections from the project finance point of view. This is the market. And for me, that is a very strong sign of a maturing and a well-developed asset class in the South African context. And this is now towards the end. There is obviously a refi of existing projects, and this is in the context that when round 1, round 2 came out, obviously those were more expensive than what we've seen in bid window 5. Bid window 5 has obviously come in very competitive. It's been the lowest that we've seen across all bid windows. I think the cheapest there as a wind farm that came out at about 47 cents per kilowatt hour, which once again, in my view, shows a very strong and a very maturing market in South Africa. The refi is obviously a voluntary process, but it says that you guys, you came in, you took your risk, right? You developed a market in South Africa that was actually never there in the first place, but you've been in operation now for 8 years, and you've shown not only to yourselves but to your debt investors that you actually are able to develop these plans and develop them properly and according to your projections, and you've been able to actually generate cash. Why don't you then, have a look, because your risk has largely changed, right? You've migrated from being a greenfield to now an operating asset. Why don't you relook at your pricing and see what you can do? So that is really the context and the background of the refi. It's a voluntary process, like I said, and the refinance gains are actually shared equally between the DOE and the developers themselves. And what the DOE piece does is obviously reduces the tariffs that Eskom then procures this power over the remaining tenor of the PPA. Once again, the pricing really reflects current market levels. So even though possibly your tariff was about 182 bucks per kilowatt hour back in the day, if you go in now, especially as a debt investor, which is obviously where we play, and you try and compete there in a refinance of these projects, the pricing actually reflects what is going on in the market today, which once again, in my view, really shows and reflects strong a strong and a maturing asset class in South Africa. I think I will close it there. I don't know if there are any questions that have come through on your side, Anzile.
So I think the two questions that have popped up, right?
Yeah.
Was specifically on our participation in this space.
Yeah.
Aside from the social and economic impact, right?
Mm-hmm. Yeah.
We've seen the private sector commit more than 200 billion into the space.
Mm-hmm.
Clearly a success, knowing that the fiscus is completely constrained.
Sure.
Why do you believe that the renewable energy program has been able to galvanize that 200 billion?
Yeah, I think once again a very good question, and a very informative question to someone that is not really intricately involved with this renewable energy program. And I think it's a world-class program, but I think one of the key reasons for that is the design of the actual program itself. When this was designed, the IPP office, through the DBSA and the Department of Energy, basically were able to pull expertise from various sectors, including the private and the public sector, and basically bring this expertise, this existing expertise into South Africa, and use that to leverage and be able to bring expertise from independent power producers that were actually otherwise not present in the country. And what a lot of people may not actually be aware of is that the IPP office itself is largely a facilitator in terms of this program. When the bids are actually generated and designed, the IPP office actually invites expertise, so legal expertise. So you'll have private legal firms bidding for that. You'll have accounting firms, your big four, and some of the smaller guys as well. You'll have guys that have expertise in social and economic development coming through there. And these guys then sit and say, this is what you'd like to say. They'll obviously get overview and instruction from the IPP office in terms of what they actually want to achieve. But then these guys use the expertise and develop this RFP and say, this is what you must score. This is what the scoring should look like. This is how much these weights should actually look like. They then feed that back to the IPP office, and the IPP office has to obviously say, well, this is exactly what we wanted, and they submit that as an RFP. When these bids come through, once again, the adjudication is actually not done by the IPP office. It's actually done by these different expertise, and they do their work, their different segments. They do this individually and independently of the IPP office, and then submit their work back to the IPP office. And that for me is exactly why this has stood the test of time, and why this actually came out very transparently in the court case, because the independence, the transparency can be shown, and it's very difficult to actually go in there and collude and change things to your specifics. And that is, for me, that has been the strongest point, and that is why we've been able to actually generate to attract more than 200 billion of investment, most of which is actually coming from international investors.
Which is great, right? Because you get the social impact, job creation, you get the economic impact, clean energy, and then you get private sector investment into a sector. 100%. So this is basically the blueprint for anything infrastructure related. And it also talks to the fact that we as private sector, we actually understand the risk now, and we have capital to deploy in terms of a responsible manner.
Yeah.
So I think the final question then is, we at POM have a dedicated credit team focusing on this.
Yeah.
On this space, on the unlisted space. Why is that of utmost importance?
It's critical, especially from an effort point of view. As you guys would appreciate, this demands a lot of effort. And a lot of these transactions can be really complex, especially the project finance kind of side of things, where you actually have lawyers, you actually have technical guys from a legal point of view, from a renewable energy development point of view. You've got engineers, and you've got guys that are in finance, obviously running with the structure. So these are very specialized and can really be complex. So you actually need expertise that is totally focused on this asset class and knows exactly what is going on, what are the risks to actually look at, and what are the best ways to actually mitigate these risks. You obviously also need to be able to say, I've been in the market, this is what has worked, this is what has not worked, and be able to pull that expertise into your credit submissions. So that is very important for me. And without a dedicated expertise, without dedicated resource, you'll actually really struggle to be able to achieve that.
Thanks, Luzuko.
Anzile, any questions on your side?
Yes, I do have a couple of questions that I'd just like to pose to you guys.
Sure.
There's a question that's come through just to ask, why is renewable energy sustainable going into the future, specifically within an emerging market economy such as South Africa? And then follow up to that is, what guarantee do we as potential investors have that we will see sustainable, consistent returns delivered from this asset class going forward?
Yeah, sure. I'll start with the question on I suppose guaranteed returns going forward. And that is really baked in the PPA, right? The power purchase agreement. So when the IPP develops a plant, obviously the off-taker, as things currently stay, the off-taker is Eskom, and Eskom then guarantees that will procure power from you over the next 20 years, right? And over that 20-year period, it's agreed what the price will be, it's agreed what the tariffs will be, and everybody's responsibilities are very clear. So as a debt investor, you know exactly this is the price, this is the margin you're actually going to be able to generate from being invested in this power plant over the next 20 years. And that is where you can actually get sustainability and consistency in terms of cash flows. And that is one of the key reasons why a lot of guys, especially in the pension fund space, are actually go into this asset class, because you've got those guaranteed margins over the tenor of the PPA. Your other question was around sustainability, why renewable energy is actually sustainable, especially in the context of an emerging market. And I think firstly, you need to be able to transition to a low carbon energy mix, right? A lot of our generation, especially in emerging markets, is obviously powered through fossil fuels, and we see every day what that does to our environment. Global warming is no longer just a far distant concept. It's something that we're living with every day. Some parts of the Eastern Cape in South Africa are actually experiencing very severe droughts, and that still continues. That has a very direct hit from an agricultural point of view, just to make an example. That's one thing. But the other thing is, you can see that the development of the renewable energy industry has actually resulted in prices falling sustainably over the tenor of, over the long run. Where you, in 2011, you actually procured power from an IPP at $2 per kilowatt hour. You're now procuring it at 47 cents per kilowatt hour. Why would you not want to do that? Because there is technological advancement in the market, not only in the South African market, but in the global market. Why would you not want to take advantage of that as a country, and especially as an emerging country, where your fiscal position is generally not as strong as those of a developed market? So those are my two key responses to that question.
And I suppose just to add, the fiscus can't do it on its own. We know the condition or the state of the current fiscus. So we need the private sector to get involved in this space. And the success of the program to date gives us the ability to deploy further capital into the space. So again, we do believe in the ESG component, specifically on the environmental and social impact that Luzuko has spoken about, key impacts there. Bringing private sector money, 200 billion Rand is a lot of money, especially if you consider what the PPA means, what this means to us from a sustainability and economic perspective. And it's not only local money that's investing, it's foreign money that's also investing in a well-run program. So whether we like it or not, renewable energy is here for the future, especially as we transition, especially as we make sure that we meet our COP26 and various other commitments. We need to move to a lower fuel consumption, fossil fuel consumption base, where we can actually make sure that our kids and our grandkids still have a planet to live in.
100%. And from a South African context point of view, particularly, you're moving on to a power generation that is cheaper and that is more reliable. We know that Eskom has actually been struggling and is expected to continue struggling over the foreseeable future. I think for me, this is a no-brainer, especially if you're in South Africa.
Thanks, Luzuko and Conway. Following from that specific question, there's actually been a comment that was made on the Q&A chat just around Eskom and the fact that they are currently having power generation capacity issues and problems, which have obviously rolled into the blackouts that we've experienced in South Africa and how it's actually had a rollover effect in the economy. So the question is Eskom still got any credibility to honor some of these agreements that they've signed going forward?
Yeah, that's a very good question. And the very direct response to that is exactly why there is the guarantee, there's the government underpin. And it basically says that if Eskom were actually in a position where they're not able to honor their financial obligations, then that plant is able to actually go a step further and say, demand payment from the National Treasury. It's very important, however, to highlight that since the first plant went online, I think in 2010, 2011, not a single plant has actually claimed a single cent against the government guarantee. And that for me, once again, goes to Conway's question earlier in terms of how these are actually structured and how these plants are actually developed, to the extent that not a single plant has actually claimed a single cent against the government guarantee. And I think that speaks volumes in terms of how robustly these IPPs and these projects are actually structured.
And I think just to add as well, the renewable energy program is a strategic investment program. And once any sort of program of this nature gets designated as strategic, it has full government support. Whether we like it or not, we need it, right? And that is how we've been able to consider risk in terms of investing in this program. One, from a developer perspective, where you would have necessarily solid shareholders or experience in that space, but then also this government underpin. Eskom can't buy it, is that support, but nothing has ever been claimed. I think a very nice question that probably segues into the end of our discussion is the impact on jobs and our thoughts on just transition potential.
So the question is, what about the effect on jobs, specifically in our emerging market? I suppose that's a broad question, broad but pointed in a way. And really it talks to just transition, right? So especially in Mpumalanga, where you have towns that really emerged out of these coal-fired power plants, what happens to these guys? And this is a lot of jobs, and this has to be taken very seriously. And the reality, however, is that that's what transition is, that's what change is, right? It means that there will be pain left, but the net benefit over the longer term is a benefit to the country. Now, in terms of the just transition detail, there is a lot of work being done at the presidential level, in fact, where Eskom is actually looking at repurposing some of their plants. In fact, they've actually come out and they're going ahead with some of these plants where they're actually repurposing them from being coal-fired to actually gas, and to some instances they'll actually convert them into solar-powered plants. And this is obviously in direct reaction to trying and save the jobs that are there, but obviously trying to reskill and upskill the employees that are actually in those power plants to make sure that they don't lose their jobs. And that is one of the key reactions, that are obviously necessary to shield those jobs. But there's a study that was done by the CSIR. I just cannot recall the actual title, and it basically said that in terms of how much people earn, that people that are actually employed across these power farms, it came out that actually, on average, the people that work across the renewable energy industry actually earn higher than guys that are actually employed in some of these coal forward power plants. So you've got that larger distribution of these coal forward of these renewable energy plants that obviously distributed in a broader area across the country and not necessarily concentrated in one area, in one province. But you also have the ability to make the people that actually work in these plants to actually earn a slightly better salary, which obviously is positive, not only from a GDP point of view, but from an individual household point of view. And these are the benefits and the positives that actually come out of this as well. And obviously, cleaner energy and you're obviously achieving all of that, and you provide through the provision of cleaner energy, which saves your health from a longer term point of view. So there will be jobs lost. There may be jobs lost, but the government is doing a lot in terms of trying to save those jobs, in terms of upskilling people, in terms of repurposing power plants. But I think from a net benefit point of view as a country, I think this is very clearly quite positive.
Yeah, and then just to add, there are various ancillary benefits from these projects itself. Bringing new schools, bringing new housing, bringing hospitals to generally impoverished regions. So we should not forget about that benefit as well. And then I suppose finally, while Luzuko spoken really well about balancing the net gain from a jobs perspective, if you just consider what a 2.5% degree Celsius level that we reach as opposed to the 1.5, what it means for droughts, what it means for famine, what it actually means for job losses in that sector, you have to actually balance both. I think there was a recent research piece released by one of our key climate change agents from the University of Wits, who said that had the Vaal River in 2015, dropped below the 25%, we could have had up to 500,000 jobs lost. So just think of that impact and how this positively then impacts if we get to that carbon neutrality and we move away from the excess use of actual fossil fuels.
Yeah.
So I think we're balancing everything, and that is way above our pay grade, but we're trying to contribute positively, right?
Yeah. So I mean, I suppose to sum up Conway's responses, you don't want to look at it from only with a narrow view in terms of the jobs, but you also want to broaden your view in terms of the impact on the country as a whole. And I really believe that from that point of view and through that lens is actually net positive.
Thanks, Conway and Luzuko. That's very interesting insights right there. I think in terms of time, we have 2 minutes left, but there's quite an interesting question that has come up. And I think maybe if you can just give it a stab as quickly as you can.
Sure.
How do you manage liquidity in the Clean Energy and Infrastructure Debt Fund for investors such as retirement funds? What is your current lock-in period within the fund if one was to invest in it? And how would you classify the risk profile within an unlisted asset class such as clean energy and infrastructure?
Yeah. A very broad question, and I think maybe it will do justice when you actually respond to that question in writing. But do you talk on liquidity?
Okay, so I think the first fund that we manage, it is quite a mature fund.
Yeah.
We've got about a 2 billion rand exposure. All of these assets have moved from construction, where there's very limited repayments of interest and capital, to operational status. So on a 2 billion fund like we have, like that Luzuko manages, we're getting anything between 15 and 25 million rands worth of capital at each payment period. So if there are requirements from a liquidity perspective or exits and the likes, we can manage it on that manner. Further to that, we are building up our pipeline of new investors into the fund, where we've seen quite a bit of appetite to actually be included in the fund, or people are actually simply saying, if you have any exiting investors, we will take up additional holdings. So that is the two key ways of how we manage it. And then from a portfolio management perspective, we also do hold certain liquid assets, just to make sure if the 15 to 25 million isn't met, that we can then sell certain liquid assets. So as example, we've got a green use of proceeds bond. We're really happy that we participated in it, but if push comes to shove, we can potentially use it.
Yeah.
And then I think the final measure is that we do also have other internal investors who would like to participate and increase their holding.
Yeah.
So we've got ways in a more mature fund to actually manage liquidity, and then also then deal with the lock-in question. The important part is that as we're growing this fund, we are seeing significant amounts of deal opportunities available. I think since we've joined over the last year, our pipeline is probably between the two infra funds at about 3 billion rand. And we've got, again, the ability to deploy. If we get support, we can invest. Right, so pipeline is very important. And with that being how we answer the lock-in question is, we are looking for people that's going to grow with us and support us as we go on this journey, but we will cater for redemptions and manage liquidity carefully, as we should from a responsibility perspective.
Yeah. So typically lock-in, I'd say minimum of 3 years, really for it to be worth your while. Otherwise, I don't think it's gonna really give you what you're looking for. From a risk profile point of view, I would say the risk is roughly medium. The risk is obviously slightly higher during construction, and that is usually the first 12, 18, sometimes 24 months of the PPA. But then for the rest of the period, 18 years, 17 and a half years, your risk actually significantly reduces because it's post-construction. So your risk is medium, but as I said, the fact that none of these plants has actually claimed anything against the guarantee from Eskom basically goes to show that these plans are actually developed and structured in a very robust manner. And that is why we're actually able to invest in them.
Yeah, conservatively medium, but I suppose we could challenge that thesis and say, because all of our projects are now in operational phase,
fully operational,
it's
100%.
Potentially medium to low.
Yeah, but that's obviously specific to our fund.
Our fund,
we invested in fully operational projects.
Yes.
Thank you very much, Luzuko and Conway.
Yeah.
I think that was very well answered, considering the time constraints. I just want to thank all our guests that have attended our webinar. Please look out for an invite around May, towards the end of May, where we'd actually like to come and present to you on our more broader infrastructure mandates, and how we actually foresee building opportunities within the broader infrastructure space. Today was predominantly just around the renewable energy space, but at Prescient Investment Management, within our investment process, we do look at broader infrastructure as an asset class. So just from our side, Prescient Investment Management, thank you very much for attending our webinar, and we look forward to engaging with you further. Do enjoy the rest of your day.
Thank you.
Thank you, everyone.
Bye.